they still got XOP down, you know.
Well, just a follow up on my Nasdaq play. What I did is for my last video, I got rid of my other call. But what I did is I did a 0 day to expiration today. It expires a day to get. What I did is I did these two trades. Which are the timestamps on them. These two right here, 6. Let's see, we did NQ. Here they are, 611 and 647. What I did is I sold the call side and I sold the put side. So what it looks like on the option chain, and this expires today. And what I did is I went way out. I sold 11,880 calls on a spread on a 10, 20, 30, 40, it's 70 point spread. And then I did a 70 point spread on this side, or 10, 20, 30, 60 spreads. 60 10, 20, 30, 40, 50 point spread on the call on the put side. And what I did is I went out of the expected range. I was looking at in the money possibility is 0, and in the money possibility is 0 is on this side also. And what I did is I collected, we do the math here, that's $42, and on this one I did $42 and $75, so plus 75. So if this wins, I'm going to get $117 profit if the Nasdaq stays in between this range here. It can't go below here and it can't go above there, and if it does, I'll collect $117 in profit. And that's just for today. And then I have this other play from last week. No, from earlier this week. No, from last week. Yeah, it started Thursday. I got rid of one. I'm still keeping one. We're collecting. Let's see what we're collecting here, because when I add other plays, it messes up the math here. So I'll do the math. Let's see how much more we're making profit on this particular play only, this spread. So we're gonna just add these together. 287 minus 176. So we're making $111 profit on this one particular here. So hopefully by the end of the day, I might not put any new plays on, and I might play gold later. Maybe at closing I might play gold, but gold is isn't really a mover, as much mover as I like it to be. But if I were to play gold, I would sell something up here. Maybe I would sell like the 18. Here, I'll show you. Yeah, 1780. Let's go even further. Yeah. So I'd sell something way up here, maybe 1800. Yeah, I'll sell the 1800. So the next play is possibly 7 to 9 days out. Going to sell the 1800 right here. See, that's the expected move. But I'm going to move it up to less than 10% in the money. Sell something here. Buy something down here. And this is about a good range. Because I'm looking for at least $100, and this is like a $1,000 collateral. So this is like a 10% return on money in 5 to 9 days. And I'd probably only just play the one side. I wouldn't play both sides, because gold at any notice at any one time, some global event, and it's going to pop up or it's going to pop down. And I like the fact that it can pop up and pop down, but right now looks like it's going down. Yeah, the gold has been going down since like 2, 3 in the morning, my time. Well, this is Pacific time, so gold has been going down since 3 o'clock this morning, so I think it has a good chance to pop back up again within the next week. But all I do is just plain, I'm just going to sell the calls on the top side, and hopefully, and then the bet is that it's not going to go back up to 18. What did I say? 18 something? I can't remember. This is still just a thought. Yeah, 18, 15. So I might even go. I may even go down, go up a little bit, just to maybe be more safer, and go out to get like my $100, and that's like $1,500 to make 110. So that's a perfect $100 right there. So this is the play I might do at the end of the day. I'm just gonna wait till I cash in my profits on the other ones, and then wait, because I don't want to tie up some money, because on futures you have to keep some money in reserve just in case I want to get out of this play. I need money to get out of it. So that's what's good about it, and bad about it is that there's no day trading pattern rule. That means you don't have to have 25K in your account, and you can trade more than 3 times in 1 week. So I'm gonna wait till my account gets up to above that 25K, and then I might start playing more stocks, like Tesla. Because if I play Tesla, I can win, but I can only trade 3 times a week. So, and I trade a lot more than 3 times a week. So I want to play like the dollar, natural gas. I want to play the ETFs, right? But I can't because I don't have that money in my account yet, the amount that I need. So, and then the SPX is what I really want to play, but SPX is the same thing as SPY, but it's like tenfold. And that's where the money makers are here. Like I can sell something up here and go out like 9 days or so, and then sell something right here, sell something here, buy something there. See how it's 10 times more expensive? So this is like a $10,000 collateral play. So that's way too much. So what I would probably want to do is play the SPY instead, and do the same type of play, go out 8-9 days, and then sell something up here. Sell like 415. Yeah. And this is a $23 for 500. So what I would just like multiply it right there. I'd buy 5. But this is expensive. This is 10 contracts you're buying and selling. So so that's why I would just probably stick with the futures. But that's my thought process here. I'm gonna wait till gold. By the end of the day, I'm gonna probably make a play. I might play on, like I said, maybe 9 days out, and do this $100 target here, and keep like at least 1 standard deviation out, or at least 1.5 standard deviations out, and make it $100 profit, possible profit, maximum profit. That's like the potential profit, but then I'll have to. This is going to be less than 10%, but see, that's why I don't. So that's a possible. That's my thinking process, that I might do that, but I'm not. But gold, I can't make as much money. I could probably do the Russell. Let's see if we do 4 days. Yeah, Russell's probably better. Yeah, it's not as much money. Russell's probably just as the Russell 2000 is probably just as, it's not as crazy as Nasdaq, but it's almost as, because we compare Nasdaq. See, Nasdaq's more smooth. Russell's like crazy. All right, that's it. I'm gonna. It's been 10 minutes, so I'm gonna just wait till these 0 day to expirations give me my $100, and then I might keep this and see if we get our $200. See if you subtract this from this, it's only 210. So I'm only looking for maybe 150. So if we do the math again here real quick, we subtract this, so 318 minus 184. So we're making $134 profit on this one. So, and we have a $210 possible profit. So I'll just wait this because this is has a lot of cushion, and I might just get rid of this one. It's like 80 to 90% of its $210 possible profit. So that's it. And I'm on a 3-week winning streak, so I just don't want to jinx it. Just keep it safe. Then obviously my next, I'm going to actually notch up or whatever. You know, like I'm using only a certain amount of money per trade, and then I'm going to eventually scale up on the same type of process. I'm going to wait another week. If I can get 4 weeks in a row, then I'm going to scale up, and I'm going to go even safer. So that's the goal. All right, bye. That's it.